All right, welcome. Wednesday, March 18th. This is the midweek market report. I'm the Wall Street Yardie, and today we're going to get into some very interesting conversation. I think you guys should find some really good insights today. Today was a very wild day in the market. Actually, this week has been a little weird, and I'm going to point out some things on the chart that would have kept you out of trouble, so that you can learn it for next time. Remember, everything we talk about here is education and entertainment, not financial advice. So let's get to some learning. And the first thing I wanted to look at today was crude oil, right? So this is the big catalyst in the market right now. This is the thing that's moving things around. And as you can see, it's not moving things in the good, because oil prices are going up, gas prices going up, everybody's paying more and can't afford what's happening in the market right now. So inflation is raging higher, and this is a big part of it. The largest component of inflation in the market is energy, right? So that's natural gas, that's crude oil, that's electricity. If those things go up, then people feel it, right? These are necessities in life, and if you're paying more for the necessities, then you can't have as much fun, and then the consumerism is just not there. So the economy doesn't boom. You don't have enough money to spend on the fun stuff and the things you like to do and want to do. So the spending slows down. People get afraid. They start saving more. They start pulling back. So this is what we're going to see. This is the main story today, right? On what's been going on ever since the war into Iran that we're dealing with now, right? So let's take a look at crude oil. So as we know, before last week, Monday, crude oil jumped all the way up to 120. It pulled back into this 80s level, mid 80s level, and things started cooling off a little bit. And then the weekend came, we got some more news, and this week again, crude oil just took off, right? So what we're seeing now is crude oil is just sitting here. Today it pretty much touched 100, right? 99.78 is the number I have here on the chart as the high for the day. But we closed right in 95 range. I gotta tell you, if oil stays anywhere above this 80 range, you're in big trouble, right? So this is very painful for everybody that have to buy gas and deal with gas prices and drive gas car and all that stuff. So you're gonna want to pay attention here and took off again. And then as it was rising, it kind of came to this level, pulled back a little bit before it took off for that big run to 120, right? So we're going to watch it. It's not necessarily a strong level right now. We just have a few touches here. But if it does come back down and bounce again, then you better believe it. That's going to be a strong level for us to watch. The other one I have on here is 67.83. This was a gap up, right, just before everything kind of pop off. So, right here as we started March, the VIX is on an uptrend. You can see it here with my yellow line. This is my 20-day moving average. This is ticking up. So is the 50, which is the orange line here. But the general market is going to be coming down, right? So you want to pay attention to this right now, especially with everything that's going on. Not only did we freeze interest rates, not only is oil higher, not only is natural gas higher, but you also have a new Fed chair getting ready to come in. Jay Powell, who's the Fed chair now, his time is up in May. So this was one of his last meetings. The new guy coming in is one that the President Trump picked. So this volatility, but a lot of this is going to be due to what we just discussed with oil and natural gas, right? So you want to be paying attention to this. If this is going up and it continues to stay, like I've been saying, anywhere above 25, today hit close right there at 25 or higher, you're staying higher than this 23, then we're in bear market territory here, right? So we're heading lower as long as we stay here. We want to see this thing get back down to 20, below 20 into the teens, right? That's when we know the bull market is good. And you know that if you look in history, when we had all the good times, it was under here, under the 19. So it's a tariff day, right? And we touched on this earlier, but I just wanted to repeat it again. This is when the VIX kind of went nuts and went all the way to what is this? This is a high of 60, which is huge. You'll see how disproportionate that is to everything else. We want to make sure that we're paying attention to the VIX. If we get back up to a 60 level, boy, it's going to be it's going to be hard to come back down, especially if those oil prices stay above 80, right? So let's keep an eye on the VIX. Let's kind of in a rock and a hard place, right? Jobs aren't growing. Inflation is getting higher due to energy costs, which is the largest component of inflation. So, you know, there's a lot of things that's not going in our favor right now for those of us that like to buy stocks to go up, right? So the market itself, switch on over to S&P 500 here. Let me give you a little zoom in, because with this one, I wanted to point out something that I kind of missed on Sunday, was this gap right here at this level on Thursday. So from Wednesday to Thursday, if you notice, there's a black space here between those, the low of this candle on the 11th and the high of the candle on the 12th. So this gap is always something to pay attention to. The gaps tend to fill, especially on something like the SPY, you know, which is not that volatile, but it likes to fill up those gaps, right? So what we mean by that is, we gapped here, but the next day we went lower. The next day we tried to push a little higher. We didn't really get higher than the day before that, but then the day after the area, and then now it came back and closed lower, right? So the things I was watching, and this is what I wanted to point out, is for these 2 days, let me get rid of this circle so it's bars here. So as we were trying to get higher and higher, we just really didn't, and this day maybe just touched the average, but these days we didn't have enough volume to take us and push us higher. When you have low volume, that means that the money, and the big money, the institutional investors, they're not putting their money up to continue pushing that rally. They're not buying into this, in this case, the ETF, or if you're looking at a stock, same thing, right? They're just not. This is one we've been watching from way back when we were in this channel up here. And I told you, when we break here, you gotta watch out for the next level below. And sure enough, we came through it, got a little lower, came back up, filled the gap. And when you fill the gap, a lot of the times, price will reverse right in that area. So gap becomes resistance as well. So this whole area here, we have 676 to 669. This is going to be a big area. Before we see any bullish momentum or upward momentum in the market, we're going to need to see price get above this area before we can feel good about any kind of rally, as they call it, right? You know, with the Fed rate decision, I just had a feeling this was coming. We see it here, and I'm gonna bring you in on a secret chart I have that I keep in my watch list here. And this one is a chart that is a compilation chart of the top 8 companies in the S&P 500. So what I've done here, and I'm gonna drop the string you need to put into your chart so you can get this. You just put it in like you would put in any other ticker. You just grab the string and put it in. So what you're gonna see here is we have Netflix plus Tesla plus Apple, right? This is what we need to understand, right? They represent 40% of the market movement, okay? If this chart is not going up, the market is not going to go up. It's too heavy of a weight for the rest of the market to push the market higher, right? We can basically only wait for sideways and hope for sideways, because that's what we've been getting. It was sideways when these guys were dropping. Look from when this was happening, back in November. If we go back to our SPY chart here, some other places coming in, financials, healthcare, some other sectors were coming in here and doing well. And that's what was kind of keeping us afloat. But those things have now fallen off, as well as this downtrend. Look at this big downtrend line here in the big boys, right? In the big names. I'll call these my blue chips because these are the guys that really represent the weight. Most of it is tech, as you can see. Amazon is a little retail, of course, and then Netflix is entertainment. But for the most part, this is all tech. So if these guys are going down, it's going to be very hard for the market to move higher, right? So we got this big that, you know, we're stuck in this range. So I marked this little level below. I don't know if we're going to get here again. You see that the last couple times we came down and touched it, we bounced higher, but we still didn't get that movement higher. And again, if we're watching the volume in that same time frame, the volume didn't get above average volume either. So the higher volume. This one is green, but remember, we still closed lower than the day before. Big volume, okay? So this is what I'm talking about. All the volume is leading us to to believe that we're heading lower. So this is my secret chart. Check out the comments below. You'll be able to copy that and put it on your chart yourself. And then, don't forget to like and subscribe. I keep forgetting to ask you guys to do that. Like, subscribe, smash the notification bell. You'll know when I drop the next one. And then we're going to go on and move on to the Qs. So the QQQ, NASDAQ 100, big tech heavy. Let's turn on our moving averages one more time just so you can see. We're now trending lower. This when your slower moving average, in this case, my 20-day moving average is lower than the one above it, in this case, the 50, then you're starting to see a downtrend. And you can see that's what we were in our big range here. This was a big range. Some trouble ahead of us, and we need to watch out. One thing I just noticed, and let me just draw this one on the chart for you guys here, is there's a gap all the way back here, back in September, right? And I'll just mark that with my gap color real quick, right? These are just the things I do to kind of keep my eye disciplined, right? So we have this gap back, not quite there yet. We still have to break through this 580 before that becomes something in play, right? But we do have our level here. And this was my prediction, is this week we might get down to 580. So if we get down to 580, touch and bounce, then, hopefully we can do some things there. But right now, it's not looking good. All our other indicators, crude oil, VIX, and then I showed you my secret chart, is telling us that we're not ready for a big bounce yet. So we're gonna take our time. So maybe this move is not as big as I'm thinking it will be, but none the same, we're gonna see tomorrow and Friday how we close this out. Right, tomorrow if we gap down, we might have a very weak close for the week. And we're going to be down here at these lower lows. So last couple of weeks I did, and in fact we did get the bounce, right? My prediction here was to get up to 472. We did that on Tuesday. We got higher. So this is a perfect example of, look, if you have a target to the upside and the price gets there, take your profits. Don't wait, because when you start waiting and start getting greedy and that greedy motion kick in, guess what happens, right? You start to feel the pain. But now, from a market analysis standpoint, we're going to look at DIA here. DIA is the first of all the indexes to cross below the 200-day moving average. Anytime price is below the 200-day moving average, it's not good, right? This is where the institutional buyers are going to get out. They're going to start selling off. They're going to start putting things to the sideline and waiting to see what the market does. In this case, what they're going to be waiting for is to see if we can get the Strait of Hormuz opened up again, right? So that we can, get oil flowing and the energy prices coming down. This is what they're watching for. So they're selling off these big companies. You saw it in my our next level down, 457, right? So that might be a play here. I mean, this candle is one of the most bearish candles you'll ever see in the market. There's probably only one other candle more bearish than it. That's called a Marabuzzo candle. If you're interested in the candles and how to read the candles, just let me know. Drop a comment below and let me know. The close right, we maybe just a penny off of the lows, right? So the close was 463 and the low was 462.76. So you talk 24 cents, right? On a $460 in this case ETF stock, right? So it cannot get much worse. And in seeing momentum from the sellers in this case, right? Because that's why the prices go low. Prices drop when the sellers are in charge. They're in charge right now. And the selling is very heavy in the DIA. So this is what you're seeing. So we're looking at, for the rest of the week, maybe DIA, now that it peaked up a little bit, touched our little upside, it might come back down to the downside, 457, right? If you're a swing trader, this is the type of stuff you love, because you could have taken that move to the upside, hit your target, get out, and now you maybe go and deal with some puts to the downside to 457, and you make money both ways, right? That's one of the lovely things about the options market. It gives you a way to play it safely on both sides. Pause. All right, so next thing here is the IWM, small caps. These are the smaller companies in the market. Boy, this one is sitting right on our support level, right here at our support as 245. Closing price was 246.02. Aftermarket, this is our post right here. is even below our support, right? So right now we're looking at tomorrow, maybe we open below our support line, and then maybe we get down to the 200-day, which is my target here, right around 241, right? So we got maybe another $5 to go down on this one, and 200-day again becomes very important. If we can bounce above this and come back and get back above this high here, if you notice, let me draw the line so we can follow it together, right? If you notice here, I'll just leave it blue. Actually, let me change that to a big yellow. I'm gonna delete it in a second. But what you're gonna see here is we touched here, come back, touched here, touched here, touched here. Ways to go to the upside, maybe to right back to 259, 260 there, right? So that's what we're looking for with IWM, right? We got some more downward pain just like they are closely. So the rate staying flat might not have hurt it too much. But we definitely want to keep an eye on that, right? The next one, big time, gold. Now this one is kind of throwing me off a little bit this week because I'm not understanding with all the pressure internationally why gold isn't moving. But one guess is that gold is taking a little breather. I mean, you can see we had a huge run up here into the new year, and they took profits. See that. We have a big wick on the bottom, right? So it sold off all the way down to this 4,800 level, and then the buyers stepped back in and pushed it. If tomorrow, we start to see some green and we start getting higher than today's candle, volume starts ticking up to the upside, then we're good. If not, we're watching these and went to the all-time high, right? So coming back down, and when it came back down, it stopped right there on that same level. So we want to see if that level holds again. So I wouldn't be surprised if gold continues on down to this and then bounces again. This might be a good place to think about jumping in, buying some, and getting in on that. You might want to think about some of the miners like Newmont Mining, NEM, or even Kinross Gold, which I have another post about them on the channel as well. Those are two good ones that I like. So do your homework, check them out. See what they're about, and if you're into it, or you can just buy the GLD, which is the gold ETF, and that might get you in a little position here. The chart is going to look the same on the GLD. You're just going to have to mark the levels up yourself, but just look for this period here from June 12th to looks like the 16th. So that whole week it got flat there, and that's where you're going to put your line, right? And then you'll know where the support level is. So moving on to silver. Silver following kind of the same as gold. It's not taking as big of a dip today, but it was down. You see, we still have this long wick on the bottom again. So the buyers stepped in. They were fighting it, right? So this is good. This is what we want to see as we start approaching support. Is we want to see that the buyers start stepping in and supporting the price towards the upside there, right? We know we have a solid level here at $71.82, $71 range, right? So in this little zone here, remember, support and resistance zone. So $70 to $71 level, this is where our support area is. We get some touches here, very close touch there. This was a slight, it wasn't quite a gap, but almost a touch there, touch here. We paused here. This same temp, this earlier in December. We paused here before it took off, right? So this is what we're watching for. We know this is going to be a good level to watch. So we're watching for the bounce here. If it doesn't and it breaks, then we're going to be down here at 64, right? Not going to mark that up yet. I'll wait till Sunday and see what happens for the rest of the week before we make any more mess of the chart, right? We'll clean this one up here at the top as well. And then let's move on to crypto. I told you guys on Sunday that crypto was faking people out. One of the stories that drives me crazy about crypto is it's supposed to be this, safety thing like gold, right? You're supposed to be able to go in it, keep your money safe, and it's gonna just grow and grow and grow. And every time I see this story, it drives me nuts. Now, don't get me wrong, I invest in crypto, I hold it for the long term. So, I don't mind these little sideways up and down, right? Because it's going to give me opportunity to lower my cost basis. But this price action going sideways the way it has, and then peaking up and coming back in, and now it's doing it again. It's peaking up and coming back in. And now we have this, this interest rate thing. a lot of Bitcoin buyers, a lot of Bitcoin traders, they borrow money to buy their Bitcoin. As mad as that sounds, this is what happens. So you got to keep that in mind. It's a very speculative thing. They're gambling. They're taking chances with it. They're not really investing. And those are the guys that get hurt in these big sell-offs. So now we have to wait and see. I was watching this 71,000 level. You know, it got up to, what's this here, 76 on Tuesday. So you know, but it didn't hold up there, and that's the key. It didn't have any more strength. It was looking promising on Monday, and then Tuesday it just sold off, and today it's getting us right back into the zone. Again, there is no wick on the bottom of this candle. This is, as you know, pretty bearish as it gets. So I cannot trust this move up yet in Bitcoin. I'm watching my moving average. My 20-day moving average is coming up, but my 50, this orange line, is headed down pretty steeply and pretty sharply. So until this one starts flattening out, you cannot trust the Bitcoin. And we have our levels, so we're going to pay attention to these levels. I'm going to put another dotted line here just so we keep an eye on this level, because this is kind of the intermediate high we got to before it failed again. But you know, right now I'm pausing right here on the Bitcoin, because we could certainly see it come back down to 62 or maybe even lower, right? So let's keep an eye on that. So just remember, crypto is a speculative thing. This is a gambling thing. It's not, there's no fundamentals behind it. There's no nothing behind it. It's just how people feeling at the time. And then now that the big money investors, the institutional investors can get into Bitcoin with their ETFs, you know, they can really move this market in ways that can hurt the small people like us. So we have to watch it. We have to pay attention to how the money is moving. Watch this volume. I mean, this volume is not steady at all. It's up and down, but even on the down days, you see it's been big. So we need to see on one of these up days where the volume really gets to maybe 1.5 or 2 times what our average is here, right? So we're going to keep an eye on that one, but it's not ready yet, right? So Ethereum, same thing. Look at this. This was a nice big move up. It just failed again right here at this level. And there's really nothing more to say about it, right? It looks like it wants to bounce here for the rest of the day. This one is going to go on, this candle will go until 8 o'clock tonight, but then, you know, we'll have to see what happens tomorrow. I just don't trust that with the market coming down the way it is, with tech coming down the way it is, that Bitcoin is going to hold it. Bitcoin will follow the market. In many cases, crypto, Bitcoin, Ethereum, all these guys, they lead the moves. So, you know, if you were watching them from back here, back in November, you know, you would have been able to kind of see when the market was flattening out and starting to turn down, you would have seen crypto was doing the exact same thing. And earlier on in the year when it turned around, right, Bitcoin started moving up, right? Even you come back here after tariff day, right, April 2nd, Bitcoin was one of the first things to move in May, and then it moved big again in July. So this is Ethereum, but Bitcoin, I'm pretty sure if we look at that chart, it's going to show you the same thing. Crypto is going to move that way. It's going to move with the market. A lot of times it will lead the market because it's the most riskiest money that is being put in the market right now. It's the most speculative. That's the word, right? So, you know, these guys are going to go in and take their chances with it because they're trying to hit this home run. And it's just a big gamble, right? So a lot of times they get trapped here, get stuck, and then, you know, they have to wait it out, right? So now they have to wait it out. So right now they started to get a little love, but it's not quite there yet. Same thing, and Ethereum, Bitcoin, same thing. Look at this. This is just the 50 is just coming down very hard. So it's got to flatten out a little bit here again before we can get any kind of excited about this chart, right? XRP, you know, I mentioned I like Ripple because a lot of the banks are using it now between themselves, but it's the same story, right? So we're following the same story. We're stuck in this range. We're going to wait and see what happens for the rest of the week. And then on Sunday, I'll let you know what I think there. All right, so that's it for the week. Midweek market report. Thank you for listening. Don't forget to like, subscribe. I'm the Wall Street Yardie. See you on Sunday.